How's it? Sean here from Mel's YouTube book site, YouTube channel. Okay. Okay, so we're going to start with lesson two today. Now, remember, we did the first lesson. We've done lesson one. So I'm just going to give you a recap of what we did in lesson one. So if you look, if you haven't watched lesson one or you haven't watched it in a while, please go watch it because every lesson builds on every lesson else. So if we lesson two will build on lesson one, lesson three will build on lesson two. So it's important to watch those lessons. Otherwise, you're going to get a little bit lost. Okay, so I'll do a quick recap. In lesson one, we opened up a bicycle store. We went and bought some stock from our suppliers. Okay. We then had some customers who came and bought some stock from us. Then we opened up an inventory account, all the stock that we bought from our suppliers, and all the stock we sold to our customers. Very important inventory account. That's the ins and it's an accurate record of what's coming in and what's going out. So we opened up an inventory account and we put those items in there. Then we did a purchases control account and a sales control account, if you can remember. If you can't, go watch. All right, cool. Let's start. Lesson number two. As always, just watch my mouse. Okay. Okay, so here's the same invoice. All right, to the factories. When we went and bought that stock, remember in lesson number one, we paid him these amounts. Okay, with that, he invoiced us out these amounts. Remember that invoice. It's the same invoice from lesson one. Okay, but now what we're going to do with this invoice is we're going to open up a suppliers control accounts, and it's including VAT and on the credit side. Now, as again, I'm doing a little example. Watch my mouse. I'm just got a little example of how this looks in the general ledger. This account, as it stands right now in total, the way it's structured, appears in the general ledger on the credit side, so that you know. Okay, now I'm going to start with what we're going to do first of all is we're going to credit factory A with the VAT that we have to pay him, that $225, and the total amount we paid him, we're going to pay him is 1725. This is 1,725 in dollars. And we did the same. We put the same entry for factory B. We also got the VAT that was included there, and the total was $862.50. Now on this side, it's blank. Now, why it's blank is when because most companies will give you 30 days or 60 days, or if you pay, you might not pay these guys straight away. So this side is left blank because once we pay these factories in full or in partial, every time we pay them for, say, factory A, we put the entries in here of what we paid them. So we might pay them 50% of this amount this month and then 50% next month. Every time we pay him, or if we paid him in cash, every time we pay him, we enter the entry of what we've paid to him on the debit side. So that's why it's blank at the moment. We haven't paid him anything for now. Okay, I hope you understand that. Okay, so we add up the VAT and then we add up the total. All right. The total to the suppliers was $2,587.50. The total amount in VAT that he charged us was $337.50. Now, important, we put that to the VAT control account for the month of March on the debit side. Okay, very important. We're not gonna do a VAT account now, control account. We'll do that in later lessons. But it's just telling you where that VAT goes. Okay, so here's the customers. Remember from lesson one, all the customers that came and bought all our stock? Well, most of it, I hope. Okay, so here's the same invoice from lesson one. Now we're going to do the same with our customers. We're going to open up a customer control account. And now this is as it's shown in the general ledger again. So once again, we use this as an example. This same account over here, everything that's written like this, goes on the debit side of the general ledger. Okay, so the customer's control account, including VAT again, on the debit side. So Mr. Collins, there's his invoice number, Mr. Collins. The VAT we charged him 161 and 25 cents, and the total amount was $1,236.25. We add that total up, we get to that amount, and we add the VAT total up. Once again, just like the supplier's control account, this is empty. We only fill this out once Mr. Collins actually pays us the amounts. Every time he pays us, he might also have terms with us. He might have paid us cash. If he paid us cash, we'd enter it in here straight away. If he pays us 50%, we'd put the amount at the end of the month. We will wait until we receive Mr. Collins's payments for the invoices that we supplied to him for what he's bought. And once he's paid us, those entries go here on the credit side. So that's why it's blank at the moment. Okay. The total customers, $2,960.25. That's the total amount over there that we invoiced to our customers. The total VAT that we invoiced to our customers was $386.25. Now, importantly, we put that to the VAT control account on the credit side. We're not going to do that account now. We'll do that in the next lesson or later lesson. All right, so you understand all that, what we've done now. All right, so now we're going to open up an assets and depreciation control account. Now watch my mouse. Assets are depreciated yearly at 20%. They're replaced by new assets once the cost of the asset has been fully depreciated. So once the asset has been devaluated to almost nothing or nothing, it's replaced by new assets. So March assets and depreciation. The assets, the furniture at cost price, excluding VAT. We're going to put on the debit side $34.78. The depreciation at 20% per annum divided by 12 months was 58 cents. Okay, the cash register, we've got a cash register at cost price, excluding VAT, $43.48 on the debit side. The depreciation of that cash register at 20% per annum divided by 12 months was 72 cents. Okay, so the total assets at cost price was $78.26. The total depreciation for 1 month was $1.30 because we've added it up here. So that's for the month, and that's the total assets at cost price. The total assets $78. All right, got it. Now, the total depreciation for 1 year is that $78.26 times the 20%. Remember, we said at 20%, which equals $15.65. We divide that by 12 months. That gives us $1.30 per month. We take the total assets, that's $78.26. We minus the depreciation of $1.30, and we get the net total. Now we debit in the assets for March to carry forward to April, that amount. So we debit the total in the assets account for March to carry forward into April. The total assets, that's the $78.26, we debit March's assets account in the trial balance with that. And the total depreciation of $1.30, we then go and credit the depreciation in the trial balance. Okay, this journal entry. We then do a journal entry for $1.30. We put to the income and expenses running costs on the debit side. We're not going to do that now in this lesson one because it can get a bit involved. We'll save that for the next lesson. Okay, so that's it. I hope I explained everything well to you. Yeah, if you have any questions, just remember these lessons lead into each lesson. So as little lessons get more complicated, you've got to remember you've got to go back to the lesson before. And I will do a recap of each lesson of the previous lesson before I start with a new lesson. All right, this is Sean from Mel's Bookside YouTube channel. Please like these videos, share them with everybody you know. Subscribe to our channel. It's a great channel. Subscribe, and it's a great lesson, great course. Subscribe to our channel, and yeah, please, questions. Any questions, suggestions, anything like that, comments, please leave them. I'm more than willing to help you when I can. All right, this is Sean from this YouTube channel, Mel's Book Sites. It's a good day on you.